Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting however with this volume profile where you can see that at the low we had an important support resistance area, resistance, eventually breaking through, moving to the point of control, passing the point of control increases probabilities to move to the value area high, great resistance here, retest the point of control, and now we are moving above the value area high. Of course, we have to be aware of potential deviations where price is going to come back inside the range and then move to the other side. But as long as we are moving above here, we don't have to think about this. Now, above price at the moment, we have a weekly gap here, which is between 52K and 53.3K. Of course, we're also in the monthly gap for the ones that saw previous videos, where the high is also 53.3K. And then a bit higher, we have another gap here between 59.5K and 62.3K. We also now pass the golden pocket taken from the high to the low over here, and the 786 is sitting at 57.6K. I don't use it often, but you also see a speed fan on my chart taken from the high to the low over here. Price found resistance at the 786, but now past the 786, where we could be looking for the 886. And the 886 at the moment is at about 55.5 to 56K. If price can move above this level, retest the 886, probabilities are very high. We're going to be looking for new all-time highs. More locally, if we zoom in to this structure over here, then currently the probabilities, however, are still higher for a 5-wave impulsive structure in the wave 1, 2, 3, 4, and now working on a wave 5. In this scenario, wave 4 retraced to the 382 to the 05 Fibonacci, taken from the low of 2 to the high of wave 3, which is a common target for a wave 4, and time-wise, this wave 4 is twice the length of wave 2, which is nice to see. The Fib time is taken from the high of 1 to the low of 2 to the high of this wave 3. The target area for a wave 5 is between the 1.236 and the 1.618 Fibonacci, taken from the high to the low of this wave 4. That is your most common target area for a wave 5 between 51.6K and 55.6K. The reason that this scenario at the moment still has the highest probability is because of time. If this over here is the end of your wave 1 and this is the end of your wave 2 in a double 1-2 scenario, wave 1-2 looking for a 3-4-5, and then inside the yellow wave 3 we look for another wave 1, 2, 3, 4, 5, right? Big bull market, wave 3 over here starting. Then this wave 2 is incredibly short in time compared to this wave 1 and also actually compared to the higher degree wave 2. Now, you do expect a lower degree wave 2 to be shorter in time than a higher degree wave 2, but there's a massive difference between the two, as you can see, right? And also if you take a Fib time, the vertical lines from the low here to the high of this wave 1, then this wave 2 did not even hit the 0.382, which is very uncommon for a wave 2 to be so short in time compared to wave 1. Now at the moment, however, based on the local structures, probabilities would be higher for this wave 1 to then finish higher and then get another wave 2 at a later stage, right? Now in the other scenario here, we are here looking for 1, 2, 3, 4 and eventually wave 5. But the same problem is here with regards to time. If this is your 3 and this is your 4, your wave 4 is incredibly short compared to your wave 2 and did not even reach the 0.382, which is very rare in the relationship between the 2 and 4. It is correct that in the rule of alternation, it says that if wave 2 is shallow, complex, and long in time, wave 4 can be deep, short, and simple. However, short still equals to, by far most commonly, ending after the 0.382, taken from the high to the low of 2 and then put on top of this high over here to compare 2 with wave 4. If we then zoom into the local structures, go to the 4-hour time frame here, then what we are looking for in the bullish scenario is an impulsive structure to the upside in wave 1 to 1, 2, 3, 4, and eventually finishing the green wave 3, looking for the green 4 and then another move towards the upside in the green 5. Most common target for this wave 4 is between the 236 and the 0.5, 47.2 to 50K, and the invalidation is at 45.9K, the 0.618. If we zoom into the final impulsive structure then to the upside, part of this blue wave 5, what we are looking for locally is the following here. We have a finished wave 1, 2 and 3 here, and then arguably this could be the low of your wave 4 and the high of your 5, but the problem here is that this move to the upside looks very 3 wavy, as you can see. Therefore, I extended this wave 4 and still keep the target area for a wave 4 on my chart, taken from the low of 2 to the high of 3 here, sitting between 51.4k and 50.6k, with the 0.618 at 50.3k being the invalidation for this particular scenario. After wave 4, we would then be looking for one more push towards the upside in a wave 5 to then finish the blue wave 5, the green wave 3, and then look for a bigger corrective structure to the downside in a wave 4. So as price is moving to the upside here, probabilities slowly increase to get a bit of a bigger retracement and corrective structure in a bigger wave 4. On the weekly time frame, we have now moved above the 1.618 target for a wave C, as you can see in this bearish scenario for an ABC. Common target for a wave B is the 0.382, which has been hit. Common target for a wave C, most common target at least, is the 1 to the 1.236, but the 1.618 is also still quite common. And as we have seen in some of the ranges here as well, and during this move towards the upside, a wave C can also still easily extend to the 2.618, for example. However, reaching the 1.618 and moving above the 1.618 does lower the probabilities a bit for an ABC to the upside and does increase the probabilities for a potential impulsive structure. However, this wave C still has potential, especially if this is a 5-wave structure, because of the impulse that I showed earlier. We're then looking for a wave A, B and a wave C, and wave C then also ends if wave 5 ends, and then we expect a bigger corrective structure to the downside. The bearish scenario here on the daily time frame is that we have a 3-wave A, 3-wave B looking for a 5-wave C in a flat structure. Currently price is ranging inside the most common target area for a wave B in a flat structure, which is between the 1.236 and the 1.38, taken from the high to the low of A, giving you a target between 51.6k and 53.1k, with the 1.618 being a less common target, sitting at 55.6k. In this scenario, however, we need to see good local weakness and also impulsive structures to the downside from the highs, because we are looking for a bigger impulsive move to the downside in a wave C and then a wave 1, 2, 3, 4 and 5. But also in a wave 1 over here on the higher time frame, we expect a 5-wave structure, 1, 2, 3, 4, 5 on the lower time frames as well. Now in this scenario, you want to see a 3-wave structure to the upside, right? In the bigger wave B, we need to have a 3-wave move A, B, C to the upside for a zigzag. Currently, this wave C here is above the 1.618. As mentioned earlier, with the very high time frame weekly bearish scenario being a zigzag, the 1.618 over here is a target for a wave C, even the 2.618 or the 3.618. It's just that probabilities go down if you move above the 1.618 for an ABC, and probabilities go up for an impulsive structure in a 1, 2, 3, 4, 5. In this scenario, however, you do want to lose some areas of support and eventually hit the 0.618 at 45.9k, because this is an invalidation for a wave 4. So if we get a 1, 2, 3, 4, 5, that is absolutely fine. But if wave 4 dips to the downside and hits the 0.618, the wave 4 is invalidated, and we are looking for an ABC for then a bigger flat structure and continuation. Now what is quite interesting is that if we do get a wave 1, 2, 3, 4, 5 to the upside here, that is actually more bearish compared to having a flat. Reason that this over here is more bearish is because you still have the door open for a potential ABC, 1, 2, 3, 4, 5 wave structure in wave C, and then a move towards the downside. While if we are looking for a flat structure here in an ABC, you would expect continuation to the upside, but a flat structure here will have a higher probability for either a double 1, 2 scenario, or you're looking for a 4 and another 5 towards the upside, which means the bullish scenarios on the weekly time frame will increase in probabilities with a flat structure compared to an impulsive structure. If we then look at the probabilities of the different scenarios, then currently on the high time frame, the daily time frame, we are looking for a wave 5, 1, 2, 3, 4, 5 as explained, mainly because of time. On the 4-hour time frame, this structure over here, we are looking for a bigger retracement to the downside in a wave 4. We also have a little bit of structural support here, the order block sitting at about 49.9k. And on the micro, very locally, right, on the 50-minute time frame, we're looking at the moment for one more high in a wave 5. Keep an eye on the wave 4 targets locally, and of course the 0.618. If that one is hit, we could be looking for the green wave 4 and then one more push to the upside in a wave 5. The current high, however, looks corrective after more of a 3-wave structure instead of a nice 5-wave structure, so we're going to keep observing what happens there. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.